Hey fools, welcome to our interview. We have Glenn Kelman, the CEO of Redfin. I'm Tim Byers here with Austin Smith. Glenn, we are thrilled to have you back. So great to see you again. Thanks for coming on.
It's an honor to be here. Thanks for having me.
It's a thrill for us too. Let's talk a little bit about, I think most fools know a little bit about Redfin. But if we could just say, you have said many times in the past, this Redfin is a technology-powered real estate brokerage. And we think that's a good description for what you do. But things are changing a little bit. And one of the things that's changed since we last talked to you is a pretty big acquisition of a company called Rentpath. So, Glenn, maybe we could start there. Tell us why the acquisition of Rentpath and what do you expect to get from it?
Well, we acquired Rentpath because we saw this strengthening digital asset. It is one of the leading rental websites, but it had declining sales. There is obviously a convergence with Zillow, CoStar, and Redfin all pursuing both rentals and for sale inventory on our websites. We want to build relationships with consumers from the time people go off to college or look for their first apartment until they're ready to buy a home. So it's very important to us to aggregate all the inventory, not just the for sale inventory. And we've already seen that when we link these two websites together, that our standing with Google and other internet search engines has improved as we get the Rentpath inventory onto redfin.com, which is now scheduled for March of 2022. We think we can significantly increase the number of people who are looking for rental apartments and deliver more value to Rentpath customers, while at the same time delivering a better experience to redfin.com visitors.
Glenn, thank you so much for that. Can you talk a little bit about the opportunity that Redfin sees in rentals? And everybody is seeing the demand for home buyers right now and all of the crazy stories, but the rental market doesn't get quite as much attention. So what is it that you saw in Rentpath that you think is valuable for Redfin? Is it lead generation for your brokerage services, or is it something else?
Well, first of all, we just want to compete as a media site. So it's very important that Redfin is a top destination for people looking for housing. And if we only serve the for sale market, we can compete for people's attention when they turn 30 or 35 and have enough money to buy a house. But for the first 10 or 15 years of their lives as adults, those folks are going to be looking elsewhere. So the fact that the number one rentals website has come into the for sale space with CoStar making a number of acquisitions. And then the fact that Zillow has long competed both as a rentals website and a purchase website, it just means that if you want to compete at that level, if you want your shot at the title, you've got to offer both types of inventory. So the first rationale was just to drive more traffic. And what we found is that we're not just going to get people looking exclusively for rentals who won't contribute to the brokerage. We're going to get people who are looking for both types of inventory, and they'll end up hiring Redfin real estate agents to buy a house instead of renting one. So traffic is just a good asset to have. We have been growing very fast. Mostly we've been the number one major US real estate website in terms of our growth. But to sustain that growth over 5 years, we're going to have to add a few new tricks to the deck. And that's why we did this. As far as how we can help Rentpath, about 1 in 5 of redfin.com visitors are looking at rental properties at least once or twice a month. And so that company really needed a partner to give it more scale. It's now competing against these mega websites. And the idea that you can be a pure play rental website and compete in that space, I think, has become more challenging. The final comment here is just that we saw an opportunity. I think there have been extractive relationships between websites and the property management companies that are the customers of those rental websites. And we just think there's an opportunity to make the rental experience so much better. We've experimented with self-service tours. We've experimented with digital contracts. We would love to reinvent the rental experience so that you could see a place online and rent it in 30 minutes instead of going through a much more cumbersome sales process. So I hope that we can be a better partner to property management companies. And I hope we can still serve consumers better by pairing people with the right place to rent. So it's a pretty big opportunity for a consumer-friendly company.
That's a really good point. I guess if there's anything Redfin has done and is known for, it's for removing that friction and pain from the home buying experience, and it still exists in the rental space. Just a quick one for me then, and then maybe back to Tim. How long do you think it would take before you have a handle on what that conduit is between the rental and the brokerage market? I hear you on being able to improve the rental experience. That's value enough on its own merit, but ultimately it sounds like this is also part of getting new people into the Redfin brand and the Redfin experience. So how long do you think it is before we'll see the strength of that conduit? Is that the March 2022 integration you had talked about earlier, later?
Well, I think March 2022 is when we would get the Rentpath inventory on redfin.com. Mm-hmm. So we should see an immediate benefit there, but it does take time to build up your authority for a new type of inventory. So Google will take some time to recognize Redfin as an authority, and the consumer will take some time to think of Redfin when thinking about a website to look for rental housing. So I think it compounds not just over 1 year, but over 3, 4, or 5 years. And the Rentpath business itself is coming out of bankruptcy. So we are going to have to invest in that business. We didn't buy it for 3 times revenue on the assumption that immediately sales would shoot through the roof. But we did think traffic was increasing even through bankruptcy. That's what got our attention, is that it's delivering more traffic and more potential residents to these property management companies, even though it has been left for dead. And so if we make a real investment in it, we think we've got a strong digital asset to build on.
Fantastic. Thank you.
It's a really good point. And I don't think you said this explicitly, Glenn, but I think it's implied that what you're building, at least it sounds like what you're building, is this hope of generating a very long-term relationship with a Redfin customer, and you want to get them a little earlier in the process through Rentpath.
Yeah.
And okay, if that's true, I mean, this is a relationship business, right? Like real estate's always been a relationship business. So what else are you doing, or just how are you thinking about driving repeat business and generating a very long-term relationship with a Redfin customer?
Oh, well, I think the first order of business is just to knock your socks off the first time you sell your house through Redfin. It doesn't matter what follow-up email you send, what additional products you offer. That first experience just has to be amazing. You obviously want to have a very loyal workforce, because we found that mostly people are loyal to the brand and the platform, but it helps when their agent is still employed at the company 5, 10, 15 years later. So we want to be the premier employer in real estate. And then we want to offer just a wide range of products, because you may want rentals at one stage of your life. You may want on-demand tours when you're looking to buy your first home. At some point, you may want a cash offer to get you out of a place so you have the dry powder to buy your next one. At another point in your life, when you really own a fancy place, you may want concierge service, where we handle all the renovations, get the grass cut, bring in some nice furniture, and have it marketed to a T. So just in general, you've seen Redfin make aggressive investments in not just the core brokerage and removing friction from the experience so we can make it more efficient for consumers and give them a better deal, but also just different products to control the entire experience, make it perfect, and to appeal to a broader range of customers.
It's if I can follow up on one thing you said there, of all of the things that I think that are, all of that sounds amazing. It feels like the hardest thing though would be to get an agent and actually keep them as a Redfin agent for 10 to 15 years. Yeah. Can you talk a little bit about what you're doing from a culture perspective to actually capture that 15-year Redfin agent?
Well, we have those agents. So I don't know where to start, but I think what's really special about Redfin is not that we invented map-based search, not that we've invested for 10 or 15 years and making the brokerage more efficient so that we can save consumers money. It's this partnership between the agents who do the actual work and the folks building the technology and the executives and the people behind the marketing campaigns and all the rest. There is a schism in America. There's certainly a schism in the technology industry that most of the people doing the work do it as Uber drivers, as food deliverers, as grocery pickers. And we want those people to be our employees, our partners, our colleagues, our friends. And that means we have to give folks a career path. It means that we have to let them develop the business within Redfin. So when you first come to Redfin, you are entirely dependent on the website to meet customers, and we help you get established in the industry. But 10 years later, the agents who are here at Redfin are mostly off the website. They're still using our tools. They're still using our network of folks to help them get into properties and everything else. But they are not being promoted as aggressively on the website. And we just have to pay them commensurately because some of the business that they're doing is because of them and not just because of the company. And so I think understanding that partnership and developing more of our agents to build repeat and referral business with us is going to be part of our growth story. So the website is going to keep growing 10, 20, 30, 40% a year, depending on whether housing is up or down. But I think the other part of this is the best place in the world to be a real estate agent. And there's a sense of love and soul and purpose and mission that no other brokerage has.
That's so great to hear. And it's interesting that we've accepted that there's so much sort of natural tension in the traditional real estate model, top to down in the transaction process, sometimes even between brokers and their own agents. So to see Redfin, sort of wholesale cast off that tension and say that makes no sense is refreshing. Glenn, can we pivot a little bit to Redfin now? And you had mentioned earlier, if somebody might want to buy a home or sell a home, they might want the flexibility to be able to sell to Redfin immediately. That industry is white hot right now. It's really competitive, but it would still appear relatively low margin. And most of the bottom line impact has come from appreciation. So is that a service that we're offering just to make the experience better? Is that a service we expect to be profitable? How does that fit into the Redfin portfolio and strategy?
Well, every product we offer has to have sustainable economics. Mm-hmm. I wouldn't think of iBuying as a loss leader for mortgage. Nobody would start a lending company and say, my customer acquisition strategy is first to buy every house in America. And then when I sell it to someone else, that person will use me for the mortgage. So iBuying has to be profitable as its own segment. But having said that, I just think the reality is that many people looking to sell a house are now going to compare instant liquidity, a cash offer from an iBuyer, to other options. Most of them will choose a brokered sale because it still gives you the maximum net proceeds. I've heard iBuyers argue that it's a better deal economically. That is almost impossible, just because when you have three owners of the property, the original owner, the ultimate owner, and this middleman, the iBuyer has to pay all the holding costs while it's vacant, and it's not providing the iBuyer any kind of shelter. So I don't think that a pure play iBuyer is going to exist. I don't care if it's Open Door or OfferPad or what have you. All of them are going to get into the brokerage business. They're going to build a website for customer acquisition. They're going to get into the mortgage and title business, just because so many people who come to you looking to get an instant offer are also going to evaluate all these other options. And that's the way it makes sense for us. There are going to be markets like this one where there's just a massive tailwind and appreciation is underwriting the business, where you're going to see a shift toward iBuying. And then there are going to be other markets where the holding costs are very high. It's hard to sell the property. The cost of capital is high, where you're going to see a shift to a brokered sale. And we just want to be in a position where we're agnostic about that, both with the investor, where you just know that either way we're going to sell houses, but also with the customer, that when we talk to you about the best way to sell your house, we don't have a dog in the fight where we make more money with one product than another. If a brokered sale is what's best for you, then that's what's also best for Redfin.
It's really interesting. If I could share my screen really quickly here, because
Sure.
I think there's something that speaks to the point you're making here, Glenn. This is from your latest 10Q. And I'm just looking at the Redfin now. I mean, by the way, for investors who've never seen this, Redfin does an amazing job of putting out all its key metrics every quarter. I really love that you do that, by the way, Glenn. So I want to compliment you for that.
Don't compliment me. Elena Perrone, Chris Stocking, Chris Nielsen, Meg Donnelly, and the whole finance team, paired with Charles Lee and Anthony Kappas of Legal. We love you. They fight for transparency. They want you to have the information. If you knew everything about Redfin, you'd own more of it as an investor. So they really have faith in the business and faith in the investor to understand it.
I love that so much. That's great. And I'm glad you mentioned all those names, but it's one of the things I love. It's one of the things I love the most about Redfin. But anyway, we just look here. So on a year over year basis, the number of Redfin Now homes sold was exactly the same. But the revenue per home sold was up about 14% year over year. And this was, please correct me if I have this wrong, Glenn. Was this the first quarter in which there was a gross profit for Redfin Now?
Yes.
Okay. So, I mean, what's interesting to me is that right now, what drove a little gross profit here does feel like prices are soaring, and you're able to get better deals here. I wonder if this is partly because some of the adjustments you made. You talked a little bit about the last time we talked to you. There were some pricing adjustments you had to make as a company to just mitigate risk of holding things like inventory when you're doing, when you're doing iBuying through Redfin Now. Is this kind of a transient advantage that we're seeing because the market is so hot, or is this a function of just a better, more stable Redfin Now?
Well, that's the argument within Redfin. Every team always wants to take credit for success, but a tailwind is part of it. And so I think some of the advantage is transient and some of it is probably durable. The transient part of the advantage can actually become a disadvantage, so that even as you're getting more operationally efficient, you're now leaning into a headwind and liquidating houses in a declining market or something like that. So I think we learned a lot going through a downturn. We learned how fast we could cover any potential losses, and it's given investors more confidence in the space. Every time you talk to an investor in 2019 or early 2020 about the iBuying space, you had to talk about your balance sheet and what would happen in a downturn. And the team just executed beautifully at extricating ourselves from that. Obviously, in hindsight, we wish we hadn't. We wish we had all the inventory.
Sure.
Just become a REIT. But that's not the business that we're in. And people who are arguing to take that position just didn't understand the covenant that we have with investors, which is that we're a provider of liquidity. We're trying to help people sell their home. We're not going long on the real estate market.
Glenn, can you help Tim and I orient to the best environment to be an iBuyer? And we've had sort of endless back and forth debate here. I don't think we have an opinion, but I'll tell you that I think we landed originally on, or at least I did, it's better to be an iBuyer in a hot market because you can then move your inventory, because there was so much balance sheet risk and balance sheet concern like you had alluded to. But maybe now I'm seeing that that's too competitive. And if somebody can get a more competitive brokerage offer, it's not the best environment. So what environment do you think iBuying thrives in best, or is there one?
I think this market is optimal for iBuying. Other people disagree. There's an argument that in a bear market, a bear housing market, that the owner of a home will pay a massive premium for liquidity. And that iBuying can be even more profitable in those markets. But I've been through 2008 and the great financial crisis, where just as the listing agent, not as a counterparty, but as a fiduciary, we would tell people your baby ain't so pretty. We're going to list this at 380, not at 420. People took offense to it. So I am more skeptical that cash offers, when priced appropriately for market risk in a bear market, will be embraced. So I think the current market is good for iBuying, especially because you would think that everyone would want to list a home right now in such a hot seller's market, but not everybody does, because they found the home of their dreams. They waited to list their property until they found that home of their dreams, because it's so hard with such low inventory. And now they need the cash tomorrow to compete as a buyer in a bidding war. And so there is just a massive premium that consumers are willing to pay for liquidity in such a hot market, and iBuyers have benefited from that.
Thank you.
I want let's pivot to the other services, because, and you talked about this up front here, Glenn, that Redfin increasingly, and maybe this is not the right phrasing, but I think of you as very vertically integrated. You have mortgage.
That's how I think of it too.
Okay, great, fantastic. So, you're increasingly serving the home buyer and seller by taking and adopting the services that we need to buy and sell homes. Can you talk a little bit about what you're doing now, particularly with Redfin Mortgage, and maybe if there's something that you have your eye on in terms of a service you could offer that you don't offer yet? That would be interesting to hear, right? Because you're definitely, as the growth story continues, you kind of the degree to which you stretch your vertical integration, as well as how much of the market you serve, it's kind of two ways that you grow.
Absolutely. So Redfin Mortgage is limited in its growth just by its ability to hire lenders, train lenders, serve customers well. I've learned from bitter experience that when you grow too fast, your systems crash, your people burn out, your customers are unhappy. But we have massive demand for Redfin Mortgage. We've built our own loan origination system. So I think long-term, our cost of goods sold is just going to be lower. We're going to be able to underwrite a loan faster and cheaper than anybody else. But we still have growing pains. The engineering team that built that loan origination system is a little tired. The lending team is going through its own issues. And you just kind of keep going up and up, but you have little dips along the way. So I think the consumer experience is going to be fantastic. Investors are going to see great results from Redfin Mortgage, but internally, there's a lot of people running pretty fast on the hamster wheel to make it all work. Title, as a separate business, is going through a thing in 2021. It's 2021, where we've had to reorganize it for greater scale. Just at certain points, when you hit 5 million or 10 million or 20 million in a business, you just run into a brick wall, and that's what's going on with title. So I think when you look at the other revenue segment of Redfin, mortgage is doing so well, and you can't quite see it because title is having some challenges. And hopefully those two things will trade off year over year, so that, if you've ever raised kids, when one parent is tired, the other parent is alive. And so I hope that happens with title and mortgage. Where we want to innovate is just probably around solving the same problem we were discussing with iBuying. There's a hole in the credit markets that iBuyers are solving. People can't get two loans for two houses at the same time. There's such an intense inventory shortage that your credit isn't even good anyway, and you need cash to compete for a bidding war. And there just has to be a more efficient way to handle that problem than taking possession of a house. And so even though mortgage is just very busy doing conventional loans and then trying to get out to FHA and VA loans, which will really drive attach rate off our brokerage business, we need to do refinancing. We need to offer service directly to consumers on our website. We don't do any of that. So there's so much growth ahead. But I think if we really want to serve our brokerage customers better, it's figuring out a way to make their currency more competitive when they're buying a house. The reason I got into this business wasn't just to get $2 out of a customer instead of one. The reason we got into the mortgage business was to make the brokerage business better, to let you buy a house that you otherwise couldn't buy, because as a lender, we have information about you. We know the home that you're selling is worth a lot of money, and we're willing to take more risk on you because of that. And we know the home that you're buying is also a good bet. So knowing about which property you are selling and which property you're buying is more information than most lenders have, and we should be able to take more risk as a result. But that's a long ways off. Right now, we're selling very conventional products. We're just trying to underwrite them more efficiently and then sell the rest to Wall Street.
Thank you so much for that, Glenn. I know we're almost at time here, so I have a two-parter question coming out of the pandemic. If we can ask you for some predictions. Which changes did the pandemic bring that appear transient in the homebuyer experience, and which ones are permanent?
Well, I think the long-term change is just in where Americans are going to live. Once you move from LA or New York City to Ohio, and you have a 4-bedroom house and a 3-car garage, you are never going back. And so offices are going to reopen. People like working together. I don't think people are going to work 5 days a week in the office. I think they're going to work 2 in the office. That's what most white collar workers want. And you're just going to see businesses and their workers embrace this idea that America and the world is a big place. And that flexibility to work wherever you want is here to stay.
Thank you. Tim, anything else from you?
Well, let's just wrap with this one question here, Glenn. Mm-hmm. There are so many amazing things about Redfin. What is one thing that you think people ought to know about Redfin that they don't? Because I'm sure that there's something that's just kind of hidden that you wish be like, man, I wish people knew this thing about Redfin. What is it?
The people. It's always that, isn't it? But I just think there's this fallacy that the CEO is the author of a company's success. I preside over it, but Alina, the person on this call with me, is a superstar. Bridget Fry, Adam Weiner, Chris Nielsen, Christian Taubman, Eileen Koo, Scott Nagel, the friends who have built this company with me are amazing. And I'd put that executive team up against any crew. I mean, if they took the soccer field, they would beat FC Barcelona. It is an amazing team. And I don't know about hate. That's such a strong word, but it drives me crazy the way the world and the media really make it all about one person. It isn't. The whole idea behind Redfin is not me, but we. So that's it. Guys, I gotta go.
No problem, Glenn.
Thank you so much, Glenn. We really appreciate it.
Lots of love. Bye.
Thanks again.
All right.
The following conversation may include forward-looking statements. The expectations, estimates, and projections of any Fool analyst or guest may differ greatly from actual results, and you should not rely on any forward-looking statements as predictions of future events. All forward-looking statements involve significant risks and uncertainties that could cause the actual results to differ materially from the expected results. The factors that control any future outcome may be outside of the control of the Fool or our guest and are difficult to predict. You should not place any undue reliance upon any forward-looking statements. Neither the Motley Fool nor any of our guests undertake or accept any obligation to release publicly any updates or revisions to any forward-looking statements at any point.